a good way of saying it. Okay, so think about what I said at the beginning of the webinar. Our taxes are our biggest expense every year. Okay, so what I'm going to do now is go through a few of the deductions that I know a lot of people have questions on to show you different ways you can reduce that profit, put more money into your pocket, live that corporate lifestyle. Okay, the first one is the home office deduction. This is also known as the business use of home. And again, these are commonly asked about deductions or ones that do raise a flag if done improperly. So this one does need to meet some fairly strict tax tests. However, if we do claim it, it allows us to write off a portion of the bills associated with your home based on the business consuming some of the home's resources. But again, it may or may not be right for you. And everyone can look at the bottom of the screen. There's also something else out there called a recapture tax. Okay, so if you own your home, we may or may not claim the home office deduction because if you were to sell that residence years down the road, you'd be taxed then because you took this home office deduction. Okay, so just know, the purpose of me bringing that up is just know the benefit as well as the consequence of any deduction as well. Claiming one deduction could potentially disallow another deduction that was offered someplace else that may have been a little bit higher. Okay, so another one is meals and entertainment. This is always a favorite, at least for first-time business owners. Feels like you're living that corporate lifestyle, I suppose. But meals and entertainment can be deducted as long as it's an ordinary and necessary expense directly related to or associated with business activity. Okay, and we do recommend that you write on the back of the receipt who you were with and what was discussed that makes it business related. So always do keep track of receipts. And if you have high profit margins, maybe you're a consultant, someone who gets paid for your time. If you have high profit margins, again, you're taxed on that profits. You're always kicking yourself at the end of the year wishing you had more deductions. Okay, again, this one is commonly overlooked, where if the ratios don't match up, it could trigger an investigation or an audit. The vehicle deduction. This is another one that a lot of people ask about. There are actually two different approaches. It's miles or expenses. Okay, you can't do both. You only get to choose one, but it's one or the other, miles or a percentage of the expenses. And once you actually pick a method, you're stuck with it for several years. Best advice I can give you is to let us help you determine what the best approach would be based on the year, make, and model of your vehicle, how often you're driving it for business, what condition it's in, how long before you might need a new vehicle, etc. Okay, and if you look at the bottom of the slide here, a lot of people ask, is it a good idea to put my vehicle into the company, giving me a company car, and in turn writing off the purchase price of the vehicle? Perhaps. Many of our clients do that, but again, we don't know if that's right for you at this point. Well, here, I'll illustrate an example. Let's say it's a $10,000 vehicle, and let's say you put it into the business and you write it off full in 1 year, and let's say for that year you were taxed at 25%. Okay, so that would be $2,500 in tax savings, which would mean $2,500 on top of the refund you're already getting, or putting $100 less that you would owe because you had a 10-minute conversation and did 10 minutes worth of paperwork. So if you think it applies, jot it down. We'll help you hash that out. So those were 3 deductions out of literally hundreds. And once you get through your compliance, and by compliance I'm referring to the things that are required to be done, whether that's understanding your filing dates or deadlines, who you're sending forms to, what the addresses are of the different agencies, so on and so forth. Once you get through compliance, then you're going to move over to your deductions. What can I write off? What can't I write off? If I can write it off, should I or should I not, etc. Once you get through your deductions, that's when you move into different tax strategies. Okay, and this is where I think the fun really begins. And this does not mean that you have to be wealthy to have some of these implemented into your financial plan. In fact, many people probably are wealthy because they have some of these implemented. And for some of these, all you have to do is own a business. Things like your medical insurance, for example. As a W-2 wage earner, you're unable to write off your medical costs unless they exceed 10% of your AGI. So most people don't qualify to write off their medical costs year after year, but if you have a business or are self-employed, it may be possible. There are things like self-insured medical reimbursement plans, and it's not a plan that you're actually paying a monthly premium on. It's just verbiage in the bylaws of a corporation that states that any of the out-of-pocket medical costs that the owners, employees, dependents, we can order however we'd like, any of those out-of-pocket medical costs are reimbursed to you through your business, and then the business calls those reimbursements deductions. So it's a way to circumvent and get around that 10% of your AGI rule. Income shifting, sometimes we call this income splitting. It's when we take the money that we make and spread it out to different individuals with different social security numbers, or to different business entities with different tax IDs or employer identification numbers. The example I've been given for a long time is something that I personally went through when I was a child, probably 10 years old or so. I worked for my father's company. He was the only owner. His office was in the home as well. I acted as an administrative assistant, I suppose, if that's what you'd like to call it. I'd help him run errands, etc. But point is, he paid me through the business as an employee. Yes, it's legal. I was a dependent of his, but he paid me. Okay, and that compensation that I received was a deduction for his business. Okay, and because of my age and the low dollar amount I received, my recollection, it was probably just a few $1,000s per year, I didn't have to pay any taxes on that money. Okay, and I did that until I was probably 17 or 18 years old. Income shifting, a phenomenal strategy. If you think that might apply to you, and you've got, 3 children, I mean, that could be thousands and thousands of dollars each and every year if you implement that. Creating a mess, that's an acronym for multiple entity structuring strategy. That's when we have multiple entities structured together for asset protection and tax benefits. Very common, you see this in real estate, but one of the examples I like to give is we have a client who has an air ambulance, meaning they have a jet that transfers sick individuals from hospital to hospital here in the U.S. It sounds like a big company, but it's actually not. It's a one-man operation. The gentleman that owns the corporation also flies the jet, but here's the interesting part. The corporation nor he owns the jet. He actually leases it from an LLC. Okay, now, coincidentally, he also owns the LLC. So the point is, what he's doing is protecting that investment of the jet, because no one or no company is doing business with that LLC that owns the jet. The only entity that's doing business with that LLC that owns the jet is his corporation. Okay, so if someone sues his corporation for whatever reason, they can't get after the jet. He's added that additional barrier there of asset or liability protection. So what he's doing is also some income shifting. He's spreading the money out into different legal structures. Okay, retirement plans. I think most people know Social Security is not proving to work out so well. If you want to stop working someday, it's probably a good idea to come up with an alternative method of savings instead of relying on Social Security. But the main reason I bring it up is because all the money that we make each and every year, we get taxed on. Okay, so why not set up a pre-tax retirement plan as a way to get ourselves some of our money where we don't have to pay any taxes on it right now? Okay, it's just tax deferral. Okay, it's a way to save some money this year. And people always ask, well, won't I have to pay taxes on it when I make those withdrawals? Probably. Okay, that's what the law says today, but what's the law going to say 2 years or 20 years from now when we retire? What will the tax rates be when you retire? Again, it's tax deferral. We put it off for another year, and the year you make those withdrawals should be the year that you're coming up with a strategy to offset those taxes that you pay, given the tax laws and the rates for those years. Okay, so really, really neat things you can do with retirement plans. Okay, estate planning to distribute wealth. Maybe you've heard of death taxes in the past. Okay, when we die, we want to be able to pass our assets and wealth off to the next generation without the government getting all of our money. You see, business entities are perpetual. When we die, our business doesn't die. Maybe you've heard the expression, go through life owning nothing but controlling everything. So what we do is we just leave a set of instructions to say who's to own the business, and whoever owns the business controls the assets of the business. So there are many different strategies that you can put in place. The more strategies you have, generally speaking, the lower your tax bill will ultimately be. And just because you have these strategies in place doesn't mean that you have to max them all out every year. It's nice to have them available. If we find a way to shelter, a little bit of money, go through one of these strategies, at the last minute, it allows us to do so. So again, I really encourage you to move into strategies like this as soon as you lay that foundation of compliance as well as deductions. Where are you conducting business? Okay, it's a pretty important slide. It's referencing Nexus. Nexus refers to where are you conducting business. Okay, a lot of the world's moving online. I'd say over the past 5-10 years, probably caused a lot of lost income tax revenue. So a lot of states have their hand out trying to make up for that lost revenue. And one of the things that a lot of states are doing is requiring businesses from other states to register as a foreign entity in their state, or get a business license, or even file taxes. So the reason I'm telling you this is so you realize this in the beginning, before you conduct business in another state, not after you've received a notice saying you were supposed to do something and you didn't do it. Because of it, you're now penalized this much, and you still need to do it anyway. So I know in recent years we've seen California all over the news. We've seen Texas, let's see, Tennessee, Indiana, New York, Hawaii, Delaware, Colorado, Wyoming. Those are the ones that are coming to mind now. There are a lot of states, too, that have legislation pending regarding online businesses. So if you're conducting business online, make sure that you make us aware of that on your next appointment. Okay. Business bookkeeping. Probably one of my least favorite activities in running a business. I hope it becomes one of yours as well. It is the most time-consuming thing you will do on the back end of your business, and it doesn't make you any money. Okay? Your time and best use will be spent on the income-generating activities. Probably the stuff you enjoy doing, product or service development, marketing, sales, etc. But the bookkeeping has to be done. It's the law. The question is who's doing it or how are you doing it? And if you were thinking of using just an Excel spreadsheet or a ledger on paper to keep track of your books, I really encourage you to reconsider if you're starting a real business. What I mean by that, sometimes people set up business entities and don't do anything with it at all for a couple of years. They just wanted to reserve a name. If that's you, keep track however you like. But if you're spending money, time, or effort, again, if you're spending money, time, or effort in getting your business started, get your book set up. Okay, you only have to do it one time. Just like you have to set up your entity only one time. And then it's just about maintaining it. Okay, and hopefully you'll leverage technology to your advantage. Do online banking, sync it up with an online business management system. Push a button that exports your bank account information into the program. All the deduction categories are listed. The softwares are generally updated throughout the year. And really the last thing you want to do is stop the income-generating activities every 3 months to address your quarterlies. And then reference the IRS website to see how deductions have changed from the previous quarter. So, get a system set up, something that's easy to use. And if you can afford to outsource it, by all means, let someone who enjoys data entry do it. Because if you're spending, let's call it an hour a day, documenting business activity, it comes out to roughly 6 weeks-ish a year that you're doing your books, so more than a month. I think most successful business owners would rather spend that time generating, call it an extra 10% worth of revenue. Okay, again, it has to be done because it's the law. How it's done is up to you. Okay, using proper bank accounts. So the types of accounts you'd want to consider, first, most obvious, I think, is a checking account. That's where we deposit the money we make. That's where we pay for our operating costs. Then there are the questionable expenses, things like your cell phone bill, partly used for business, partly used for personal. Yes, we can help you figure that out. Savings account or a separate checking account. Probably not so obvious, but we need someplace to put your tax dollars so you don't spend them. Okay, there is a 100% penalty on unpaid withholding taxes. And I assure you, your previous or current employer has a separate account for the tax dollars. You may want to follow suit there. Okay, guys, I've got just a couple more important slides, and then we're going to call it a day here. Common types of IRS penalties. Some of these, most of them I would say are for businesses that are in their first year after you get penalized once. Normally doesn't happen again for the same reason. But under or overpayment of taxes throughout the year. Now, it doesn't have to be dead on, but it's not like your personal taxes where you're hoping for that high refund. They give us a window, and anything outside that window is penalized. Okay, late filings, fairly self-explanatory. Inaccurate filings, if something gets rejected and we have to refile. Okay, that 100% penalty on unpaid withholding taxes. Again, that's why we have that separate account for our tax dollars. failing to keep records. Don't throw anything away. It's actually called civil tax fraud if you cannot back it up. And the most common penalty for a first-year startup company is failing to pay the estimated tax payments. Okay, so better to hear about them now, we figure, than for you to get a notice that says you've been penalized for not adhering to the law as it's written. Okay, so what to do next? Guys, I'm going to recap what I feel are some of the more important points of our Intro to Business Taxes webinar. I'm going to mention a couple new ones as well. For those of you with an LLC, you need to figure out how to tax it. Okay, again, if we don't choose, the IRS will figure it out for you, and they will tax you at the highest possible rate. Okay, if you're making money, you need to figure out how to pay yourself. Okay, please, please, please don't just transfer money from your business to your personal account, assuming you paid yourself correctly. You likely did not. Okay, you need to figure out what's withheld and where it goes and who it goes to throughout the year. Okay, now, regardless if you brought in $1, deductions really should be the mantra right now. How can you live that corporate lifestyle? How can you have the business pay for things? You want to write off as much as you can here the first year. Okay, putting assets into your business. Okay, maybe you have a computer that you bought a year ago for personal use. Now you're using it for the business. Let's talk about putting it into the business and deducting it. Okay, likewise, if you have any debt or liabilities, your startup costs, for example, we want to put all of that into the business. Try to appear like a real business. Okay, when we have those assets and liabilities on a piece of paper, that's called a balance sheet. Okay, businesses have balance sheets. Give you a financial snapshot of where you are. Okay, see how recent tax laws affect you. I went over a few today, showed you a slide with a bunch more. Make sure you're not missing out on any deductions or credits that are offered. Okay, it's money you're going to be leaving on the table. Setting up your business accounts. Now you know what needs to be done if you've not done that. Figuring out how to deduct or pay yourself back your initial startup costs. Okay, go ahead and write that down, recouping startup costs. We'll elaborate on the next appointment on that. Determining your filing dates. Okay, so whether or not your annual return will be due in March or April, whether or not you're going to have quarterly federal, quarterly state filings, sales or use tax forms every month, franchise taxes to address. Create the tax calendar, and hopefully you can do it electronically. Set alerts on the calendar. Just don't get caught with that failure to file notice. That is very easily avoidable just by mapping out and planning, which sort of leads to the last bullet point on this slide. Yes, with business taxes, you will be spending a little bit more time on them than you do with your personal taxes because it is a year-round activity. Okay, there are generally multiple filings throughout the year, but if you do it right and you plan, you should be paying a lower percentage in taxes because of it. Okay, so again, it's an easy way to put money in your pocket if you plan. Okay, so you can use your business as a vehicle to lower your tax bill. It takes 2 conversations to make it happen, but it's absolutely doable. Okay. The last step for today is to schedule part 2 of the consultation. Again, it is a one-on-one call. I'm going to show you how to do this now. Okay, at the bottom of the slide here, we're going to pop up a little button, and if you click on it, it's going to take you to our scheduling page, and I'm going to walk you through this real quick. Okay, so go ahead and click on that button to schedule your appointment that just popped up, and up will come a window in your browser, so you can schedule your appointment. Okay, first thing it asks for is your appointment number. Okay, this was emailed to you when you registered for the webinar. If you don't know it, please do not guess. Okay, you can simply email us at one-on-one at 1-800accountant.com. Again, that's the number 1, the letters O-N, the number 1 at 1-800accountant.com. Be happy to email it over to you. And then you're just going to let us know what day and time you'd like to speak. Notice that it does default to today, as you can see. If there are any times available for today and you feel like you've got some momentum going, you'd like to continue the conversation today, go ahead and take that time. Today doesn't work. As soon as the next business day, we should have some slots available. Also, do notice that all times listed are in Eastern. So if you live in a time zone other than Eastern, just do the math to determine what time it is where you are. So if you put 9 a.m. Eastern and you live in California, we will call you at 6 a.m. Pacific and talk to you about taxes. And I know some of you probably want that. So whatever works for you. And then just press submit. It'll send us a notification of your appointment request and we'll send you a confirmation as well. But as soon as you schedule it here on this page, you can go ahead and put it on your calendar. Okay, we will be calling you at that time. But write that appointment date and time down. It's not another webinar. It's a one-on-one call with one of our tax advisors. And here's what's going to happen. What we'll do, actually, first off, if you do have any business partners or a spouse and you file a joint tax return, meaning all your stuff together, please have them available for that call. Business partners and or spouses' taxes will also be affected, so we'd like everybody on the same page. But on that call, we'll have already gone through your profile that you're filling out now prior to speaking with you for the appointment. So at least we'll have a general understanding of where you are in the startup phase. But then what we're going to do is have you elaborate, painting a clearer picture as to what's happening or will be happening with your business. Of course, you'll express your concerns to us, and then your advisor here will help you prioritize and tell you need to do this first, you need to do this second, maybe 3 months from now, you're going to have to worry about this. And again, all of this is at no cost to you. At the end of the call, your advisor will provide you with a quote for us to prepare your business taxes. However, you don't pay us unless you actually retain us, and you don't actually pay us until we start doing the work. Okay, so if you don't retain us, that's fine. Hopefully you got some great information and you go ahead and implement it. But either way, guys, that's about all I have for you today. I sincerely hope you enjoyed our Introduction to Business Taxes webinar. We are barely scratching the surface today. Trade publications, by the way, they do say that first-year business should probably be addressing this stuff for about 20 to 30 hours. So hopefully you've got a good head start, or at least feel like it now. Go ahead and finish scheduling your appointment. They do fill up fairly quickly, I know. But again, if you do have any questions, feel free to give us a call in our webinar department at 727-350-9655. Again, that's 727-350-9655. Okay? All right, everyone, congratulations again. I wish you all the success in the world this year and appreciate you taking the time to view our webinar today. You have a great day.